conflict in Ukraine is having its effect on the business world. Oil prices have continued to rise after the news that the U.S. and the U.K. are to ban imports from Russia. That move is a major escalation of sanctions on Moscow, where oil exports are a key source of revenue. Well, to break that down for us, we've got our business editor, Stephen Carroll, on the set. Hi, Stephen. First of all, what does this move mean for the U.S. and for Russia?
Well, it's definitely a very symbolic move, and it's a big escalation of the sanctions that we've seen coming from Washington against an import that's so important to the Russian economy. Realistically, Russian oil doesn't make up an awful lot of what either the US or the UK import. It doesn't make up a huge portion of their overall oil supply. For example, the United States imports the most oil from Canada, and Canada's already said that it can make up the shortfall that it's going to experience from Russian oil. So there isn't going to be a direct or a major direct impact on the US economy as a result of this. For Russia, on the other hand, it's a big problem. In theory, they could just sell that oil elsewhere, because, for example, European Union countries haven't imposed an import embargo on oil. Russia could just look for other customers. But in practice, there aren't that many buyers out there for Russian oil at the moment. We saw what happened when Shell, for example, decided to buy that container of Russian oil at a heavy discount. They were forced to apologise. They've now announced a withdrawal from all Russian hydrocarbons as well. Goldman Sachs estimates that there are more than half of Russian oil exported from ports is remaining unsold at the moment. JP Morgan says that 70% of Russian oil that's already at sea is in tankers and struggling to find buyers. We've actually got ships out there full of Russian oil that can't dock anywhere to be able to sell it. So that's going to create a bigger problem for the Russian economy overall. There could be a knock-on effect on the country's oil industry. For example, they may end up cutting production as a result of the fact they just can't simply find buyers, and that will have a bigger ripple impact down the line as well. Of course, that's what the US is aiming for in this sort of measures. They want to hurt the Russian economy. It'll also be hoping that it puts pressure on other countries like those in Europe or China or India, for example, to reconsider their purchases of Russian oil.
So how is all of that going to impact prices?
The less Russian oil on the market, the higher prices go. Today in trading, we've seen prices push higher after this announcement, not dramatically so, up around 1% and up a couple of dollars a barrel compared to yesterday before we had this announcement from the White House a short time ago. Brent crude, the international benchmark of oil, was trading around $129 a barrel. That's still below the spike that we saw earlier this week, which was $139 a barrel, and it's still much more significantly higher than we had seen in recent weeks. Just a week ago, oil was $122 a barrel. Before the invasion, it was under $100. In January, we were talking about $70 a barrel for oil. The expectation now is as well that prices will keep rising. Bank of America says that a broad blockade, so more broad than what's been announced, of Russian oil could trigger a shock similar to the 1979 oil crisis. They say that could push prices above $200 a barrel. Russia's deputy prime minister said earlier this week that prices could go as high as $300 a barrel if Russia is cut out of the market. To try to combat that price rise, the International Energy Agency has announced that it's releasing 60 million barrels of oil from government strategic stocks around the world. The organisation has signalled there could be more where that comes from as well, if needed. There aren't a lot of other easy solutions to find production. There isn't an easy way of ramping up production elsewhere, at least in the short term, and that's the sort of thing that pushes prices higher as well.
All right, Stephen, thanks so much for that. France 24's business editor, Stephen Carroll.